And I think we're live. Let me just double check here. We had a little bit of let's call them technical difficulties over the weekend as we try to get the stream up and running. Sort of an impromptu, almost emergency live stream, I guess, because of the market. I know there's been a lot of volatility this week. It's been a busy week. But we are live after some technical difficulties. I wanted to, introduce everyone before we go through with the regular sort of programming. A couple weeks back, we had a stream with a guest for Black Swans, who was an options veteran on Wall Street for over 15 years. A lot of people from the Greeks.live community liked that stream, and today, I'm happy to announce that Four Black Swans will be joining me as a co-host for all Greeks live streams going forward as we discuss, Bitcoin, options trading, crypto, markets in general, the news, anything that's impacting the retail. And I guess you can also say we have an institutional audience as well. So, Four Black Swans, I'm happy to have you as a co-host. And if anyone wants to learn about Four Black Swans, we did a stream a couple weeks back. We could probably post it underneath the link here for future. But do you have any comments? Are you excited to be talking Bitcoin with me each week?
That's where we're. First of all, yeah, excited to be back. I'm excited it was well received. I think a couple of weeks back we were just complaining that volatility was Bitcoin vol was just down and down and down, down and to the right, and we're in quite a different place now. So, yeah, excited.
I know. And we also have to fix your boomer tech problems as well because your picture is like the default picture and your microphone was like broken. So don't worry. Now that you come from the TradFi world, but welcome to crypto where we like to talk about markets on Twitter and make hypotheses that either are blown up in 5 seconds or you look like a genius and you gain 10,000 Twitter followers overnight. Wow, we have 79 people with us on the weekend stream. I guess it is a good time to stream because a lot is going on. I think more than we say that a lot, but actually there is a decent amount going on, I would say. Um, especially, you know, price action aside, I think the headlines this week that I saw were the government shutdown finally coming through to an end. Bitcoin is like close to entering a bear market, as I think I saw some headlines. Um, what headlines did you see this week that kind of popped out at you before we dive into the options and trading whatnot?
One that came out, I think it was just last night, and I think Scott Besson had laid it up like on Thursday, was Trump's announcement of tariffs on certain imports coming down. I think coffee was one of the ones that were named. I think that's pretty prescient, and I always find that these little nuggets that are dropped, there's so many ways to look at them, and I think especially in uncertain times like right now, um, keeping a really wide lens and keeping an open and flexible mind is really critical to being able to see around the curve. That's how I've been using NewsFlow to kind of reflect my risk appetite, if you will. But we can get into positioning and how we're structuring portfolios a little bit later. But those are it's been quite a busy news flow, which is super odd when we think about the government's been shut down. We're talking about all this lack of data, but it seems like just every 5 minutes there's like an article that just is blowing your mind. Maybe I'm too much now in the Twitterverse, and hang out with the Greeks live community, but that's my sense of things. That things feel shaky,
Things feel shaky, but I actually like see on in my world, I'm monitoring the sort of, I guess, institutional activity as well, and there's still a lot of interest. And believe it or not, and we're gonna go over this news later on in the show, but the market structure bill I think is an important one that came out this week. Myself and I had a few teammates that were trying to review it. Hopefully, I can post and share some updates. But yeah, I agree. I think we were. It's funny because we were talking about the volatility kind of just not being there. And then lo and behold, like 1 week later, volatility is made great yet once again. Although it might get faded, but and we'll take a look at it. But just looking at the chart, which I know everyone wants to look at first, Bitcoin, we lost this 100K level, which personally I thought that, when we set those lows around, what was it, 100K or so, I thought that could have made a pretty good low. I think we swept it like 99 and change or 98. And I said, okay, I think that's a good low. And then we did a bounce to 106.5, and then now we've made a new lower low. So what does that mean? I mean, I think that, me looking at this chart right away, um, I know it's not super inspiring because we've sort of been downtrending since October, end of September, early October, around that time frame. Maybe thanks to the October 10th sort of flash crash, if you want to call it that, and then also the subsequent hawkish FOMC kind of got us to where we are right now. But I don't know. When you look at this chart, we'll look at like the options data and like sort of dissect a few trades, and also we can probably talk about if you traded this. I'll talk about how I was trading it. But if you look at this chart for Black Swans, not very inspiring, right? That's probably why the sentiment's so bad. I think the sentiment is like it's pretty awful.
Yeah, I gotta say though, so I don't want to just have a sound like a perma bull. But if there was places to bid spot, we're pretty close. I would say these are not times to be like max shorting. Um, I also feel, and I want to come back to the word sentiment because I myself have used sentiment pretty heavily over the last few years, and I'll come back to that in a minute. But I think the 100K psychological barrier was very warranted. A couple years ago, um, there's a good follow out there. He's based in Japan. I think he's based out of Tokyo. But Weston Nakamura pointed out that Bitcoin being a a global asset, it's priced not just in dollars. So back then, I think the psychological barrier that he was talking about was like 10 million yen for one Bitcoin. And I and so anytime I see these round numbers denominated in just one fiat currency, I'm like, okay, let's broaden the lens, especially with what we're seeing now. So I do believe though, this 100K is going to leave kind of a mark, and until we either break through, this market is very indicative of chop, and maybe we can pull up some OI and maybe futures and perp funding data later to show if this is accurate or not. But my take of the trading this last, call it 3 weeks, and you can maybe use October 10th as a demarker of like when volatility really stepped back in. But it seems like we like traders are pressing levered longs when we bounce as opposed to fading the regression, right? So like, which is why I feel much more comfortable buying now when things look so dicey. I guess this is, now that I'm saying it out loud, it sounds like what Warren Buffett used to say, like just buy when there's blood, and there's
He
a
did buy.
ton,
I think he actually deployed to Meta or Google. I forgot the headline. I didn't want to
yeah,
make this the AI podcast. I wanted to make it the Bitcoin options and crypto podcast.
yeah. So I feel like, so well we can say, I think Harvard's endowment added IBIT was like one of their largest either ads or largest like now outstanding positions, at least in the publicly, because their endowment also holds privates. But I think in the public space, um, the IBIT is now like a meaningful percentage of Harvard's portfolio. Um, is that, some I can already hear, my right shoulder, left shoulder devil angel saying like, well, maybe Harvard's a top indicator. Oh no, please, please, that would be, typically they've done well as an
Yeah,
endowment.
but there's a lot of like top indicators before. I mean, I think some of the sentiment stuff, it's like you can't read fully into it. I think like if you're gonna make a dashboard, you have to like weight the sentiment versus all of like the other indicators that you might be looking at if you wanted to create a dashboard for a signal. And then like after weighting it, like having a score or something like that. But I mean, just looking at the chart itself, it doesn't inspire confidence, especially like losing 100K. But I would say that, I like where we're sitting. It's right above the yearly open, which is at 94K around, I think 93, 94. So I actually kind of think that this is a good area for buying spot. Um, I was thinking about putting on perp, but we'll talk about positioning. ETH also looks pretty awful. I mean, you could call this a downtrend since the summertime. Um, but you know, ETH has struggled, especially during that just earlier in the year, like Q4 to Q1 sell-off. Um, I We'll talk about how to play ETH later, but were you trading ETH? Do you have any comments? Just because we're just flipping through the charts.
I so I think a couple when we were last speaking, I was pretty bearish on ETH BTC. Let me pull this up. I think that's played out, but I view it as just beta, and I don't want to throw in just MSTR like willy nilly. But if the way I'm positioning now, I would throw some flyers, like some short dated flyers on things.
Calls like weeklies.
Yes, exactly.
I don't know about weekly. It's been so choppy. But actually playing with the weeklies on low time frame has actually been, there's like people who have almost fully automated, basically fully automated like gamma scalping strategies. But even like a click trader, um, might actually do well on the weeklies, sort of like a very, very short term options. Like, ETH, I don't know. Like, so Tom Lee has this target, Q4 target. It's a big ask in my opinion. You know, there's I think
What's his?
that I think it's 7,000, ten
Oh boy.
thousand.
Okay.
So yeah, I don't know if we're gonna do a 3x from here in 6 weeks time. We've seen it before in crypto, but I mean, look at the April lows of 1,500, and it went to nearly basically 5K, right? So, pretty decently crazy things have happened. There is a fundamentally like bullish thesis for ETH, and that is the story of stablecoins. But I feel like that's too in depth for this stream. I want to get to like the trading and options, and maybe we'll get to it at the end. But there is like a bullish thesis to be had for ETH, with the stable coins and Scott Bessent saying that he wants to get it to 3 trillion or 2.4 trillion by 2030. We're at currently 300 billion in issuance across all um, USDC, USDT, and whatnot. So I think that story is actually still developing, and there are undercurrents from the regulatory standpoint that are going to be there to support that. And I think ETH is actually one of the L1s that have withstood the test of time, although it wasn't always the easiest of times. Um, I just I feel like this is the point where I should be buying like 2026 calls. Um, but I might wait a little bit, even though I might get a worser entry if you may.
Yeah, I feel so. I would just add to that and say the Jan 26 probably has the most liquidity. And I'm going to guess that with the elevated vol, the best way to neutralize your cost is to just to put it on a spread, so a call debit spread effectively.
So the funny thing is, I actually had calls on ETH for end of November expiration, 4,800 strike, and I was actually up on those. And then when we lost 3,600 or so, that's when I started closing out. And then I'm glad we did. I mean, I'm glad I did take the L. I mean, it's sad to see a position go from green to red, and then, but then seeing the price action afterwards, I think, I made the right decision because the market really is going through this like risk off phase. But would you say just from I feel like it's overdone a little bit, which is why I started buying spot. What do you think? Do you think there's still more blood or some chop? I think it's overdue. It's overdone. This move down to the downside.
So I'm glad. So two things. I think this chop can last for another week. If we just flip back to the news flow, I think what's interesting is the market was still hanging on, like the broader market was still hanging on before the announcement of the government reopening, and then the day the government reopens, like
It was bad.
it was so bad. And this is like a classic buy the rumor, sell the news type thing. So I don't think, I'm hoping that this is not like a more like cyclical a regime shift. But I would add, I want to just follow up with what you said, and it's so important here is when the market isn't trending the way, like, I think the last time we were on, we did call. I think I called at least that we would try for new all time high. I think we actually got. I forget exactly when we streamed, but we did squeak in a new all time high, and we did it in like consecutive up days, both crypto and equity. It's just consecutive up, a grind up. And now you have this short term chop, which the market's actually giving a lot of opportunities to de-risk. So, as an example, when we had that, I think it was one of the Sunday pumps when we just pumped back up to like 104 after we notched at 98 the week prior. I I sold everything at a pretty much for flat to a small loss, basically flat on Monday before Veterans Day, and I am so glad. Right, it was just not one of those where you want to be sized up because the market's telling you, the price action's telling you that the market doesn't really have conviction. Um,
No,
so yeah, so I think that it's a good time to just be open ears, open minded to different things. And when we talk about um, positioning, size is so critical to that. I feel like there's just, whenever I'm reading CT, there's always, it's either Lambo or McDonald's. And I'm like, no, man, there's so much more space in the middle. Like we shouldn't be operating in that framework where, if I don't make this next trade, I'm gonna be
it's
flipping back.
unhealthy. Yeah, it's
Yeah,
unhealthy.
it's really, really bad.
But a lot of the folks on CT, I think, are from a younger audience. So you kind of get that sort of vibe, I guess. And hopefully not everyone goes to McDonald's, and obviously we want the Lambo dream for everybody, but I think that mentality actually is dangerous and leads more often to the McDonald's than the the Lambo side with that mentality of trading. But with that said, I think like we can dovetail into the Bitcoin volatility, which I think we were saying like make Bitcoin volatility great again. It's firming up at least if you look at the devol measure. If you're trading options sort of like on a daily basis, you're looking at the implieds. You're probably seeing them firm up, especially because realize is actually I actually haven't looked at realize but for today, but I do. I mean, the moves are pretty significant. So one of the funny things for Black Swans is that whenever this thing hits 30, I mean, I feel like even in 2023, in when you saw D-vol and the 30 handle. I mean, I think it was just like a it was like a you got to be owning instead of like selling. And I was not a big fan of selling during our last stream. I didn't want to, and you know me, I like to do my basic, weekly 10 delta or like 45 days to expiration sort of um option selling. But I was like, I can't stomach it because it just doesn't make any like it wasn't worth. We're picking up at least, well, a lot of the folks in the Greeks Live community were picking up pennies in front of a steamroller, and that was exactly the point where it was very easy for the steamroller to get you. And so now that I've been doing this for so long, I'm glad that I was not really, going in size, shorting any options. Now I actually do think um, selling options is a good idea. What do you think?
It's definitely more attractive now. Selling cash secured puts, or you can even make it like more size defined by doing a put credit spread. Um, I also think
Put
now is
credit spread. Wait, how do you define the put credit spread? Just to make sure for the 500 people watching.
so a fully cash backed put spread. You would, let's just say Bitcoin's at 95K, 96K right now. Um, to sell an entire put with a 90 strike, you'd have to have $90,000 available, or collateralize it with your Bitcoin. But with a put credit spread, you would sell the strike. Let's just stick with the 90. You sell the 90, and then you buy, call it an 80. And with that, you are reducing how much you have to put down to have this credit. The 90 should cost more than the 80, right? So
Yeah,
you're
closer.
right. It's closer to the swap price.
But are you
So
selling two of the 80s
oh, you mean like a ratio?
ratio?
Yeah, I don't know if I would add that much complexity. So if you want to add some convexity to this, and that, I mean, buying a double on the lower, you would be effectively having like a sponsored short, if you will. And I'm actually on the other side of that. If I was to do a put credit spread right now, I would couple it with a call debit spread. So a synthetic long, effectively, right? So I want to collect the credit on the downside, and then go long, with the hopes that that this chops for another week, and then by year end we should have a lot more positive news and flow. And we could talk about FOMC, but I feel like, yeah, there's a lot of things going into year end right now that I feel like it is they're kind of just throwing like grenades into the room and then leaving, and then the market's left like all bloody and like hurt, and then we have to talk about this on the weekend. This is how I feel, so I wouldn't ratio it, especially to the downside. If anything, I would just be looking for a way, on small size, to try to eke out a little bit alpha here and there. This is a time to be like really nimble and small, and like if things go sour, you shouldn't feel like your net worth is like in jeopardy. I feel like this is also time to zoom out. We're from 2022, 23 bottom, like we're arguably we did like from if you 16K to 120. If 95 is, if you take all your W's from then till now, you don't want to put any of that at risk, is effectively what I'm trying to say.
Yeah, I
um
mean, we're seeing that like from the long-term holders, like a lot of them selling spot, and even a Wall Street Journal article covered that this week.
yeah.
So maybe we're actually close to the bottom in that sense because Wall Street Journal is actually looking at these on-chain data. The interesting thing when I look at this chart for Black Swans for DVol is earlier this year, Q1, Q2, we had price down in spot and DVol down, and now we're having price down and devol up. So price wise, same direction down, but devol wise, firming. We're firming, which is an interesting observation. I'm not saying anything from it. It's just what it is. I'm not going to use it to predict the future volatility of Bitcoin, but something that I'm monitoring. All right, flipping through this. IBIT. I know that you're more on the TradFi side, so what do you want to speak to the IBIT? What is this 1 year vol chart? Did you toggle this for 1 year? This looks like Fidelity.
Yeah, yeah, good eye. This is the only highlight I wanted here is that there hasn't been a solid opportunity to be selling put premiums, selling puts for a premium rather, since the liberation date, lows, price lows, right? So vol high,
hmm
um, which is what I've been doing in some of my like retirement accounts. So that's just another way to get some positive deltas into like long term positioning. Again, it's all spot, right? These aren't like trades that I'm jumping in and out of. I do, on the other side, um, I did have IBIT calls. I think I bought them on Tuesday.
Yeah, let's talk about your trades for IBIT or on the Deribit side as well.
Okay. Yeah, I did have some, and you're gonna laugh, but yeah, I think there's like 3 DTE. I bought it on Tuesday for Friday expiry, expecting a bounce, but
Got crushed.
those
It's
I
fine.
just got completely crushed. Again, these super small size, so it's not something you
Yeah,
know
yeah,
you
yeah.
you,
You're
this,
putting what you want those that's the whole point of options, right? Like you want to put 100 and then there's a chance that if we did get that bounce, that 100 would have been, 300.
yeah,
I don't know
exactly.
if it's going to be exactly that payout, but yeah, I get what you're saying.
This is on the on the roulette table. This is buying a box as
But
opposed to
that's exactly what happens with the shorter expirations. And actually, a few Greeks Live traders were doing that, especially on the puts. I feel like Greeks Live is just like momentum trading the direction of the Bitcoin price. The whole community went from like selling options and generating yield, and then the yield got so bad because vols are just hammered. And now everyone's just like up, down, up, down, 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 down. It's just like Momo, pure Momo. Although I guess Momo for the Bulls is pretty dead at the moment. But people did cash on some puts this week.
that's great. That's a great tell of like there's market dynamics or there's market participants rather who are able to observe this change in dynamics and be like, wait a second, I'm getting ripped off if I just sell premiums back in. If you look at like September, which is I think when we jumped on the pod and we're like,
That's exact.
this is down
Yeah,
only, but
yeah.
now it's
People were saying that. Like they said that they listened to the stream and they're like, oh, they're right. The vols are not good for selling.
I would
And
I'll be on the record saying the opposite now. That is at least on a relative basis is true that it's more attractive to be selling vol.
oh yeah, for sure. I agree. Um, maybe, and we could talk about trade construction ideas when we get to some of the options positioning I saw from the Greeks Live Telegram channel. But yeah, when I look at this, when I look at this IVIT chart, like it would be nice because we have two separate flows of options. It's like I want to know where the IBIT traders are um, heading, and maybe we can do this for another stream. But some IBIT data that I'm interested in asking you about, we'll take it offline. The next one is actually about spot. So yeah, not looking good. I think we had some of the largest outflows, right? This week for IBIT
Yeah,
ever.
I think this is going back. It looks like about 2 weeks, and if you just the all the way to the right is the aggregate across all of the spot ETFs. I believe that's true. Yeah, GBTC is now spot too. So um, if you just look at the last couple days, you're looking at over a billion, right? In net flow, net outflow. I mean, in the face of the grand total, like we go back, Harvard is buying IBITs now has IBIT on their books, and if you look at the total flow this year, it's 58 billion positive. So call it a billion outflow. People whether they're taking profit or de-risking or doing some rebalancing for the portfolio for year end. The optimist in me is like people could just be de-risking to pay for the Christmas presents that are coming up. I'm trying. I ran out of reasons to be like max bullish, but I'm still doing my best to find these little itty bitty things. But from a trend basis, not amazing, of course, here. Um, but of course, you know, you can't really, these are the things, bottoms can take a long time to carve out. And this is only one of the few pieces of things you can look at. Obviously, you can pair this if you do an aggregate of dollars with this and spot flows. Maybe you know you can get a better idea. Something of interesting, by the way, that I caught. I didn't know this until I was listening to another podcast a couple days ago. But um, U.S. gold and silver investors for like the last few years were selling paper gold and silver. So like ETFs like GLD and SLV, where they're essentially paper backed, right, or futures backed, as opposed to physicals. Whereas the Chinese investors were buying physicals and essentially offsetting all of the selling pressure from from the U.S. And I wonder if that's a dynamic that we can identify with on chain versus, you know, like I don't believe these
The
um
ETF. You're talking about
the
the ETF.
right, exactly. I mean, there's a ton of ETFs that are just futures based, as opposed to be spot backed. I mean, now there's even gold ETFs that do a physical delivery. That's the same way the futures, like the COMEX futures do. But just an interesting dynamic, as in like, you know, if you can see if there's some kind of like behind the stage trading is essentially going on in terms of positioning, right? Like where China's going long physicals, US is going short paper, or not necessarily short paper, but they're at least getting out of it and selling. And then now, you know, I feel like that dynamic is flipped. We're long paper and long physicals, right? You see Costco headlines with we're out of silver. Costco's out of silver. Can you imagine 10 years ago Costco and we're like, yeah, we sell silver and we're sold out? No, not a
We're
thing.
out of silver.
Yeah.
We're out of silver. Wow. I didn't even know. That headline came out this week. Costco's out of silver.
I could pull it up, but it was a week or two ago probably because silver is back to a new all time high. There was a
Wow.
rotation going on. You remember a couple of weeks back where
Yeah, I saw.
I think you had messaged me. I was on vacation, and you're like, did you sell any of your physicals? And I'm like, I can't. I'm on vacation. And you're like, I think it's topping, and I think you called it. It was like 4,400.
I know.
Uh,
I peakoed it. I
and
bought those puts. Small. It was a decent call. Like the only thing that went wrong was the Ethereum, my Ethereum position. But yeah, I like where your head's at. But sorry, I got distracted because while you were saying that, I was looking at the flows and I just noticed that November 10th has no activity except for Bitwise. And I wonder why. And also the other thing I noticed is that on October 29th, so I don't know if you see the poly market. Let me throw up this poly market chart for you in a second. So October 29th is when the rate cuts on poly market um, started to go from 3 for the rest of 2025 to, or sorry, 4, and the chances of 2 started going up. Or sorry, I had that right. It was 3 to 2 basically, right? Um, October 29th is when you see that drop on the screen for 3, and then 2 spikes up. And then, of course, it lines up. You get the October 29th, 470 billion. Wait, is it billion or million? Oh, it's in millions, sorry. So,
millions.
yeah, so it started October 29th, and then you just had, you know, a lot of outflows each day until what was it? The 6th was the first like positive day, and then just again smacked down hard until the 11th, and then 3 days consecutive outflows after that. So it's definitely skewed towards it's just a direct response to less cuts and then the hawkish Powell. But don't you think that he has to cut? What do you think? Do you think he has to cut?
So I think when the government was shut down and we didn't have CPI, we didn't have jobs reports or unemployment rate. We essentially like the secondary and tertiary data. ADP was coming out, but you also had those killer headlines of was it Amazon who said they're going to nix 30,000 corporate jobs?
30K? Yeah, it's a
Yeah,
lot.
and then I think the other day Verizon was like another was like is their biggest cut in like decades, I believe. Um, so those don't really give me the warm and fuzzies. And so when you talk about these essentially mass firings, and then we're kind of in the dark in regards to data, that to me, I mean, this is a vibe, right? Like it's purely a
That's
vibe. Those headlines scream we have to cut. But then you have him going essentially full hawk on. I think it was actually October 29th was his presser, right? So that lines up with the that bad outflow day or before on the previous. But I think word for word, he said something along the lines of like, I think one of the reporters asked him like, "How do you feel about the stock market?" He's like, "We're richly valued." Or
yeah, he said we're overvalued.
yeah, don't do that. Come on. So on the same end is like um maybe they see things
that we
a
don't.
little. Yeah, exactly. So like maybe one of the sites I was checking out the other day was Trueflation, and it
It's
is
ticking up.
just. Yes, exactly. It's been ticking up ever since I think April or May was the bottom, and I mean it's not huge. I think it's like 2.5%. I think at an annualized rate. So still not at the Fed's 2% target, but um, one of my fears, I'm hoping it's like it's just not warranted, and I'd like to feel you out. But one of the analogs I've been thinking about now as the year end is coming up. Previously 2018 was a great analog because that was we had the government shut down in 2018, but now that that's passed, I'm thinking there is a potential, if there's some probability out there where this is actually closer to 2021, year end 2021, where markets made new all time highs, everyone's is extraordinarily happy. I mean, maybe not the crypto fellows are hurting right now, but at least in the equity market,
Equity dip buyers actually came in hard.
yeah, it's been holding up. I don't think that like S&P is more than like 4 or 5% off all time high as opposed
But
to
how do you
18.
view that, like the capex? I know I don't want to go in super deep into AI because there's so many AI. There's actually the intersection of crypto and AI, which is very exciting to talk about. Well, we will probably cover it at some point. But yeah, like the equity dip buying is just it's un when you look at crypto, which has like sadly, I mean, there's just so many altcoins, right? But we're gonna try to cover like Bitcoin, Ethereum, Solana, the majors, and of course like major news. And if there's an altcoin that, you know, might have some sort of relevancy or, significance, we'll talk about it. But the equity dip buying is seems to be still driven by retail, and maybe folks who might have still missed the April lows looking for dips to get in.
Yeah.
But the CapEx and AI, the spending is like, it's still very high. But my friend actually just brought something up to me saying that it's not they're not spending cash anymore, and they're actually financing via debt, which I don't want to get into all of this because we're about to talk options positioning in the next slide. um, but yeah, yeah, let's not open up that can of worms.
Yeah, we can say that for later. I do have some thoughts, but I just want to pivot back real quick to the year-end 2021 analogy, and I just want to lay out a couple things that were lining up in my head. So we have a hawkish Fed, a resilient equity market, inflation potentially ticking up. We don't have the government figures just yet. If we ever will, I don't know. And we have midterm elections coming up. So, and like going into Q3, Q4, like everyone, um, and one of my own expectations was that fiscal spend will eventually moon, right? Fiscal spend has to come because midterm elections are coming. And we can all assume that Republicans are going to pull out all the stops to essentially remain in control. But I'm questioning myself, and the others and consensus, right? That what if that general notion is wrong, and that like that fiscal spend comes, but is essentially to just neutralize um, whatever deflationary forces we're battling now. I don't know. This is just a live thought that I had a couple days ago. It's not fully vetted out, but just throwing it out there that there is that the stinker doomer in me coming out a little bit with this, in that if it is super late cycle, late 21. 22 is a rough year, man.
Uh, yeah, I could see that. I could see 2026 Q1 being tough. My original thesis, like in August after Jackson Hole, was that we were all systems go for Q4, and it would look a lot like 2021, and that you know late Q4, meaning December, we'd have a pretty significant pullback. Right now, it seems to be happening a little earlier than I expected. I know that we had the October 10th crash in crypto, and then I know that we had the hawkish FOMC. If this were to happen in December 15th, this would be in line with sort of how um, I was viewing Q4. Obviously, there were some changes. We had the government shutdown, less spending. The burgers are spending less, and then we had the hawkish FOMC, and then of course Powell's, yeah, like his just terrible. It was like just all terrible comments for risk assets. But then on equities, the dip was just bought, and then on crypto, it's like it looks like um, it's struggling to catch a bid. But, I still, despite all that, I still remain positive. I think that, if you're a trader or if you're an investor, like actually not a bad time to be adding. I think things are actually a little oversold here. So you can technically buy yourself an option um, for either a play for a bounce or for like a longer term hold. I think these are good levels with pretty clear invalidations if you do want to have a stop out. But yeah, I'm just going through the rest of the slides here. I think this was the poly market Fed cuts.
It's
Wh-
possible, by the way, if we go back to the poly market, the Fed cut probabilities or the cuts for the year, it is totally on the table that Powell's jawboning on was it October 29th is actually positive in a way that it's actually slow. It's doing a light deflation of the market pricing, right? Like S&P crypto has come down notably since then. Well, at least crypto has come down notably since he started sounding more hawkish. And all this pain that's happening right now buys them this buys
The,
them the chance
the
of this
cut.
cut. Yeah, exactly. Yeah, yeah.
That's what I was trying to say earlier in the stream. I was like, I think that I know that there's the trueflation data is like ticking up, and it's kind of funny because like in the U.S. we measure things at like 2.5%, but then like other countries have a lot more. But, big economy, so smaller, like, percentage could actually be quite significant, I guess you could view it that way. But I think that if you're seeing Amazon cut 30,000 jobs, you're getting these headlines where AI is, like, taking over. Although I think, like, the US government, I think in some ways is trying to, like, soften there's a narrative there, right? AI, it's very hot. People are very afraid. It's a very sensitive topic because people are losing their jobs. We have the privilege of just being on a stream and selling options and buying, 3 DTE calls to see if we're gonna pull off a 3x. There's other people out there that are actually getting th- like it's pretty brutal out there is what I'm trying to say. So that's why whenever I saw this in October on October 29th, I was like, this is such a fade. But of course the market has to take its turn, right? Like a lot of people forget about that. Like, oh, even though you want to fade the decision, right? Like I might think that they have to cut no matter what, but that doesn't mean that the market isn't going to de-risk. You know what I mean? So, as a trader, I learned that over the years that, you might have an idea in your head like, oh, he's gonna boomerang back to a cut, and that might be your base case. But, you know, I would say it's like if you're viewing it as like a poker hand, the turn came out and it's not the card you kind of want, but you think that you're gonna hit a flush on the river, so to speak.
Yeah, yeah, I think that's exactly it. And he has his army of, Fed speakers saying like, yeah, we don't know, the data is missing. I mean, they can hide behind that now, and
They
like
need to be forward looking. They like without turning this into a whole macro podcast, like they do need to be more forward looking instead of data dependent because data dependent I don't know if it's working, to be honest. Being data dependent.
yeah, I think it's easy for them to kind of hedge their hedges, and then they can, go both ways, which sometimes is hard for them to do.
Yeah. All right. I want to switch over into talking about a couple options positioning. This is not the full options sort of positioning report, or at least I just sort of cherry picked some that I was scrolling through the Greeks Live Telegram, which by the way, if you're one of the 700 people watching with us right now, you should join the Greeks Live Telegram for the options flows so that you can see this data that I'm showing sort of like a weekly snapshot, but you could see it live so that it might be useful to you. I know it's useful for me, but what I have on the screen here for Black Swans is just a couple cherry picked options trades that took place, I think, largely on Friday during Asia. So yeah, like long puts everywhere. The December month end, 90K puts I see, and then 85K as well. And this is like $800,000 in premium spent for each of these. And then what I also saw was for November 28th, someone had a long 125K call position, 500 contracts closed out. Um, I don't know if you got a chance to look at these, but what does this tell you? I mean, these are cherry picked. It's not going to be the full sort of like list. We should going forward in the future streams, sort of try to have a more, I guess, holistic view with all of the options block trades. But what do you think about this?
Oh, that last one with the closing a short call essentially at 0.0005. I think that's the last. That's literally the lowest digit you can sell it for.
He was closed. He was long them, but he closed it.
Right, right. Which means he's given up on.
Yeah, exactly.
I mean, we were joking about this last time, but some of these are really hard to get out of. And I don't know
No, he
when this.
blocked them. He blocked them. It wasn't on screen, so.
Okay, okay. But I mean, directionally, this does not scream a ton of confidence. Like, was there no one selling puts in the last couple days? That
There
would
were a
be.
few. There were a few. I actually have that on the next slide, actually.
Oh, you're
Short
tricking me
puts.
like that. All right, all right. Here we go.
I mean,
That's
I
kind
wanted to have a balanced view, short puts. I actually like the idea of short puts here.
Likewise, I think we kind of go back to the jump in volatility, kind of makes that a little bit better. One of the things, and I'm glad to see this here, is when times are just a little shaky. Um, Sizing is important, but also time. Um, if you are going full port short put with 1 week expiration, and you're going like 10 delta out, you better be prepared to get us fully assigned, because we're in that type of market right now, right? So something that I've been doing for myself, um, is I'm shorting like IBIT puts all the way out in January now. So to give myself this mental framework of, if there is a longer drawdown, I'm not out here day trading my entire portfolio trying to,
See,
you know what I mean?
this is why Jeff liked you because you had the older boomer style. Like people in Greeks Live, we're looking at like the next day, and people are up 24 hours monitoring their positions. But what you're saying, and for the 700 people on this stream, is like you're buying yourself time um, to react as well.
Exactly. If you throw your whole nut at something, you really aren't giving yourself. Think of like cash as optionality in times like these, where
Right. That's
you
good.
know, if you're at 99% deployment, like something goes slightly wrong or not according to your plan, you have 1% of your nut left to okay, that sounded weird, but you essentially don't have a lot of capital to take advantage of whatever's playing out next. And this is one of those times you just don't box. Um, and I think we were joking around last time, like how many times did you have was your deribit margin bar like orange and red? And then something
Quite a
actually
few.
went wrong, and then it's auto opening futures to offset your and then you're just like, oh my goodness, I can't calculate my delta now, and you're just like close the laptop and then you rage quit, right? How many times has that happened? If that's
Well, that's the thing with Greeks Live now. They have the automatic delta hedging, which is a great tool that Jeff and the team built. I really like that tool. Um, but yes, before that tool existed, it was more I mean, unless I mean I'm not technical enough to program these algos, hedging algos myself. So if you're a retail trader, having that automatic delta hedging on Greeks Live is very useful. But to your point, I mean, like what's on screen here is just it was just a bunch of positioning flying around during Asia hours. Um, and I just thought it was interesting to call out like you have people opening 250 contracts. I think that was like 500K or 800K of premium for December 110K calls. So it's not like all like some of this flow is stuff that you see at the bottom. In my opinion, maybe for a bounce, I'm still, you know, I'm still overall if you're on a long enough time frame, like bullish on Bitcoin. But I think the market is just still reacting to the FOMC. And in terms of options positioning, like this was the first week actually like before I told you that I wasn't very sure or very comfortable with selling options. Um, Now I am. I like when I see it doesn't matter if it's up or down. I mean, I'm just trying to fade the move as like an options seller, right? Like I'm just trying to fade the move. And then whether if this is a severe enough move for me to go naked on the put side, which um, I am. I actually layered in some short puts this week, and maybe we should actually like demo that on a stream, demo account or whatever. But if if there's enough conviction on a short put idea, you can either do it naked or if you are not as comfortable, um, I don't think instos would actually I do there are some instos that go naked, but obviously you sleep better if you do it as a short put spread, right?
yeah.
For credit.
I
And
I'd be inclined right now just based on where vol is and my own confidence level it is to be short straddles right now and maybe just throw on like a long call credit spread
short
outside.
straddles because like what you think chop for another week,
Exactly.
right?
Yeah, exactly. Yeah.
Yeah. I unless there's a catalyst that comes to really drive this market in one direction or another. I think that the reason why I favor short puts is because we just had a pretty significant multi-week move to the downside. Um, so it makes sense and we're also in somewhat of a value buy territory, in my opinion, for Bitcoin right at the yearly open, right? I think we're $2,000 above the yearly open or something like that. So we're just right there, like give or take. I'm not gonna call it down to the exact dollar. So for Black Swans, I posted something on Twitter and I was saying like this is a good area to buy and people if you're off by like 1% people are gonna smoke you for that on crypto Twitter, so you have to be very accurate or very precise, especially I think I gotta warn you on the Greeks live stream as well, gotta be very precise with if we're gonna call out any positioning. You're gonna get the crypto hornet's nest on you.
Oh, and I'm gonna reiterate then, having high cash right now, critical, absolutely critical.
Oh, okay, all right.
You can still capture upside. I'm in the boat with you in the sense that I'm expecting a near term bottom, with maybe another week of chop. but I've been buying, and from a portfolio perspective, I went from 50% cash, 60% actually, it was even higher. At one point, it was closer to 70% stables to 50, and now I'm at 30. But I'm just saying from what I from what I feel from reading crypto Twitter and stuff, people are usually like 90, 95% deployed and 5% stables, and I find to be a supremely challenging corner you could end up putting yourself in. Um, but with a 30% cash bag, I can still pick up on these 5 DTE, 3 DTE, a lot of convexity due to time, right? And it could be one of those five baggers for something super small. And then suddenly my 30% cash bag is looking pretty nice. But I'm with you. I've been buying spot on the way down, especially down in the 90s. I neutralized it when I had that bounce back up to 10, I think it was 103 or 104 on Monday. But
Nice
I
short-term trade.
yeah. No, no, no. That was actually to get back to some cash.
Oh,
Um,
okay.
I didn't have conviction that the bottom was in. For myself, for my own, for like risk management, portfolio management, I wanted more cash at the beginning of the week, and I'm saying now, Saturday, full 6 days later, I've redeployed some of that cash.
Okay, got you. Makes sense. Yeah, my conviction in a bottom actually grows as we go lower, which is very weird to say. Um, but like there's a few ways. Like you either buy high, sell higher, or you buy low, sell high. But I guess you can't really buy low, sell high on a lot of altcoins because you buy low and then it goes lower. Like it's very dangerous. But Bitcoin, I think like now is sort of graduated. It's in a multi-year bull market. Uh, I guess if you go far out enough, like on the monthly chart, it's it's yeah, it's trending up, but I think like a lot of the spirit and morale is just it's just down. Um, Even though we have bullish things like the crypto market structure bill, which we kind of glossed over, but I'll just talk to a little bit of it now. But I think that the crypto market structure bill is really important because it gives institutional players more clarity on how to actually engage in the market from number one, like just general rules, like who is the regulatory body. So Bitcoin is a commodity, um, Ethereum is a commodity. Basically, everything that's not a security is going to be regulated by the CFTC, and then all the other stuff is going to be regulated by the SEC. Especially if you have to do the Howey test. The most important thing I think from that market structure bill is that 360 days from the passing of the bill, which by the way I heard is going to be around Thanksgiving or first week of December, 360 days within the signing of the bill, institutions are going to know what the capital and margin requirements are for um, trading Bitcoin swaps, I guess you can call it, and then you know affiliate entities. How do they structure their legal structures to put on hedges and stuff like that? So um, in the background of all of this, I guess terrible, let's call it terrible price action, um, there's actually fundamental tailwinds coming. Like institutions are literally going to be buying a lot of derivatives, which I know we prefer like the spot demand because that's just more sticky. But being having access to derivatives unlocks a whole segment of the market that was not able to operate because crypto is still in this gray area despite the ETF being out for 2 years. Like this market structure bill has been we've needed this for like a long time now, and we're within weeks. And so from the institutional side, I can just say that's a very good thing that this is coming around the corner. I'm not saying that right away things are just going to go to the moon, but it is a positive tailwind, I would say, not a headwind. So, what I want to ask you for Black Swans as we sort of wind down the stream at the top of the hour here is what are the tailwinds and headwinds for, let's just say, the next 3 months going into February?
Headwinds, I would say we have the unemployment. We kind of need some unemployment, like macro data. We need some unemployment to come through. Um, and I think once we get some more clarity and footing on like Fed direction, I think that'll help a ton. Um, so far as tailwinds go, I feel like as we were talking about this, um, I am beginning to think that Powell did help by letting air out of the market, and that there is folks who are um, overly bearish now, like essentially missed shorting the top. If, for all intents and purposes, like there's some real pain out there. Let me pull up. So you mentioned like regulation, and one thing that's benefited this past year is stable coins, right? And you look at Circle.
Yeah.
Circle is down almost 70% from its peak. It
Okay. But
post IPO,
sorry, continue.
well, no, yeah, that was a large part of it, and like there is definitely market pain out there, um, to warrant like not being full on bear mode here. There has been pain already. If you look at, and I think some of the quantum names are down even worse. Some of them are probably down like 80. I don't know. I'm not following those tickers per se, but um, Galaxy's another one. I think you had thrown that one out there not long ago. That one's probably down like maybe 25-30% off its recent peak. So there is a lot of opportunity here. Um, and I'd say these are when one of the things I want to go back to actually, when you had mentioned sentiment earlier, I'm a fan. Like I find myself using that as because it's a fun gauge, right? You can read a headline and have a totally different interpretation than somebody else, and there it is. That's your sentiment indicator, right? Um, as opposed to like the sentiment indexes, which I think you have to couple with, because a week or two ago, I was before we were this low in terms of like BTC price. I was seeing tweets about how we hadn't had the crypto sentiment indicator this low since April, and it's like yeah, but then it can keep going lower.
It went lower.
Yeah,
We were
lower.
we were at zero happiness and we went into negative happiness.
Which we went to sad and mad effectively. I think all of these things need to be taken with a massive grain of salt, and like if you are going to slice and dice them, like make sure you have a good framework on how you're converting sentiment, or at least even your own view and biases on sentiment, into actually how it affects your trading and your portfolio. Because if all you're trading on is vibes, like the risk profile is really really high. um, and I couple that with, if you're trading on vibes and you're on like 5 DTE, you know, what's the joke? I guess like I want ketchup with my fries, or I want fries with that, because that is super dangerous. I'm saying that because I've been there, right? Like May 21, I called you. I was like, dude, I blew up one, I blew up the Derby account. It's gone, right? This is from experience. Like these are things where you can have a plan, have an idea, and you read one tweet and you're like, yeah, I agree with that person. I'm just gonna go all in with that. And then suddenly you're like looking for that person to give you updates on their positioning, and who knows? Maybe they're on vacation, or they're out playing basketball or something, and then market nukes or market rips, whichever, and you're hinging on somebody else's opinion to drive your move. That is a tough spot to be in. Um,
Dang.
sorry, you were asking about headwinds and tailwinds. I kind of
No, that was
veered.
good. I think that was good. I mean, I intentionally made it sort of like a wide scope, I guess, of a question, and I think that was a very good way of sort of expressing it. I think like if I were like my take on headwinds and tailwinds, I think that the sort of the headwinds that I was expecting to happen in January are sort of coming a little bit pulled forward. Um, I was thinking that equities would have a bad Q1 and then crypto starts 1 month earlier. So sort of like December, we have a local top, and then January for crypto, and then January that would be for equities like a local top. Um, and then market would have kind of trended down for Q1, but find a bottom similar to April of like this year. And then the Republicans, they're gonna pull out every single rabbit trick out of the hat, whatever you want to call it, and to juice things. And we see what happens from there if there's anything else. But like the direction of the market, I just think that it's up and to the right now. Even with Liberation Day, it was more about like when do you actually fade Liberation Day? Admittingly, I faded it too early in that I actually didn't think that there was going to be tariffs at all. Um, but then eventually you had to draw the line and say, okay, all right, this is just gone way too overboard. So, like without getting into an itemized list per se, I just think that the headwinds kind of came up early. Like I thought that by January of next year, equities would be trading rich. Powell just said we were trading rich a couple weeks ago. Um, so he kind of just pulled things forward a little bit, and maybe again that's setting up for more bullish price action to follow afterwards. Now, after we get through this.
I think that's a great way to sum up like where my head's at, in that he helped take some air out, and now folks are de-risked, right? And actually, it's interesting because the blow up on crypto uh, perps was on October 10th, which was actually before FOMC. Now that I'm thinking about it,
Yes, it was terrible because we had the blow up. We had 2 weeks of chop, 3 weeks of chop, which is like the base case for the market to recover and find its footing. And then we had the hawkish FOMC. So it was for crypto people, it was just terrible because you had just double whammy. It was like a triple whammy actually. And so that's why like the sentiment is just so bad. But behind the scenes, it's just like you just know it's honestly more about when to fade, I think, this down move. And as we said on the stream, like starting to position for that fade now, I think makes sense. Any last any final statements for the traders out there? We have about 800 people watching right now.
stay nimble, protect your bag. Um, I just pulled up the sentiment indicator actually from what is this, Coin Market Cap, while we're talking, and we in March, the sentiment indicator fell all the way down to 17, and then it did a double bottom on Liberation Day. It tagged 15, and that difference is about a month in time. It's about 4 weeks. We just hit 16 yesterday, so I think kind of coincides with my another week or two of chop. So stay nimble, stay liquid, and always protect your bag, and also protect your sanity. Being at 99% deployed, I don't think I'd be able to sleep properly, and then that's boom, that affects the rest of your day.
Yes. 99% exposure to Doge. That is not our financial advice. By the way, not oh, we need to start doing this. Disclaimers because um we have to sign off everything. Actually, we should probably do it in the beginning. Uh the disclaimer like this is not financial advice. We are not um uh like licensed financial advisors. We'll probably work with the Greeks.live legal team to figure one out because we do talk about trade ideas, sort of like as like a blog, but we don't want anyone getting ideas um, and taking this as like official financial advice. So
Yeah,
we'll get that sorted out.
all you have to do is look at my profile picture to know how unserious I am.
we we couldn't make it as traders, so we're doing a podcast. That's basically what's happening here. All right, man. I think we got to end it there. Saturday stream and sort of impromptu, but we had to do it because there was just so much volatility. I'm glad that this was sort of the kickoff because just look at the slides. The slides are there's some white space here. The sizing's off. It's things are just really janky. So if you're watching this, you just know that the stream quality would just be up only from this point. This was the low point. We had technical difficulties. The profile picture for Four Black Swans wasn't working. His microphone wasn't working. But we're glad to have you on board, a 15-year options veteran from Wall Street to talk crypto options with us, the market, crypto in general, and of course, I mean anything that impacts the market, we're gonna cover because AI stocks pulled back, and obviously that impacts um, the market. So I'm glad we had you on for this kickoff. I'm glad you're going to be the co-host of the Greeks live stream where we talk all things crypto, all things Bitcoin, and all things options. Any final words before we sign off and enjoy the rest of the weekend?
I'm excited for this. This is a if this is a weekly thing, I'm very excited, and I hope I can add some value to the chatter.
This is most certainly going to be a weekly thing. We just need to find the slot for it, and we could talk offline about that. All right, 800 people on with us. Thank you for tuning in. Do us a favor and retweet the stream. We are not sponsored by anybody, so your retweet goes a long way. Um, and appreciate you guys tuning in on the weekend. All 800 of you means a lot. I hope you all enjoy the rest of your weekend. And of course, we're going to be on the Greeks Live Telegram, where we chat pretty much every single day about options and crypto markets. So if you want to catch us there, the links are in the Twitter bio, and we'll catch you there. Cheers, everybody. And for Black Swans, catch you on the next one, man.